Okay, hello and welcome everyone. Welcome to JFD Traders Tea Time with me, Darius Anucauskas. Today's the 6th of November 2019, so welcome everyone. Welcome to this Wednesday's afternoon session where we're going to have a quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Also, just a very quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos. And of course, our JFD Bank website, and specifically our JFD research tab here, which you can always check out on a daily basis. And if you go on jfdbank.com and click on our research tab on the top here, it'll take you to this page, which we, as I said, update on a daily basis, and I believe you can find something useful here for yourselves, so feel free to visit us. But for now, let's jump into the charts. Now, the first one I want to touch on here is the S&P 500. Now, looking at this index yesterday, it was the only from the three top U.S. equity markets, the top U.S. indices, I would say, that closed in the red. So basically, looking at this picture here right now and looking at this 4-hour chart, there is a possibility for this one to move a little bit lower, maybe go for a bit of correction. But let's not forget that we are still kind of hanging around above this nice upside short-term tentative upside support line taken from the low of the 8th of October, and in a way, as long as it remains above it, then there is still a chance for the bulls to jump in here and push this one higher. Now, as you can see, after reaching this level here, the all-time high near the 3,085 zone, the index has started drifting lower. This is what we saw yesterday when the index closed in the red for the day. Of course, don't get me wrong, if this decides not to travel all the way here towards this upside line, but decides to reverse to the upside again, probably will wait this one out with the upside, and will wait for a clear break above the 3,085 zone before examining higher levels, because this way the index would confirm a forthcoming higher high, and we could then target maybe the 3,100 or even above that. But who knows, because this is a bit of an uncharted territory for the S&P 500. So let's keep an eye on this one. If this index starts dropping below this upside line and drops below the 3,048 zone here, then there is a possibility we could see a bit of declines here, because not only that the price would be below its upside line here, but also probably below the 21 EMA here on the 4-hour chart, shown as the yellow line. If you cannot see it, well, I assure you it's there, but this one right here, basically this yellow line, so if we see a drop below this, then yep, the price would be placed below both of these, so the upside line and the 21 EMA. So in a way, it kind of could increase the chances of a further move down here. Initially, we will target the 3,028 zone, but a slightly better target for us could be around the psychological 3,000 level. But again, like as I said, first we need that break here. Silver, something that I haven't looked at for quite a while, and it's quite an interesting picture right now happening here, because we are balancing slightly above this upside support line taken from the low of the 1st of October. So before before I started this video, like an hour probably before that, the silver was kind of already aiming for lower levels, and you can see that today we did have a drift lower, we did have a break to the downside, but it kind of failed to stay, or should I say, it failed to keep the 4-hour candle above this, or sorry, below this upside line. Now, of course, all this activity right now is kind of a little bit good for the bulls here, because in a way, as long as this price remains above this upside line, there is still a chance for the bulls to jump in here and push this one higher. But as you can see by the arrow that I've got drawn here, for us to get a little bit more comfortable with higher levels, a push above the 17.91 zone is required, and only then we will aim for higher levels. This level here, the 17.91, marks the inside swing low of the 1st of November. So if we get a nice push above this, this would also place the price above all of its EMAs here on the 4-hour chart, and then yep, it could increase the chances of a move higher. But for now, we're going to remain neutral. We're just going to continue observing this one because it's very close to potential break here again. So in a way, it could drop lower again here, but ideally what we're going to be looking at here is we'd like to see a maybe a daily close below this level here, below this upside line, and below the 17.51 zone here. If we do get something like that, then it increases the chances of a further drift lower, where we could then target the 17.15 area marked near the low of the 16th of October, or even going further down towards the 16.87, which is the lowest point of October. So yep, keep your eyes on this one, guys. So for now, like I said, we're gonna remain neutral and just continue observing the price action. AUD USD. Now, this is something that I talked about this morning, basically, and what I was saying that if we see a drop lower here below this upside line here, this short-term tentative, or actually no longer a tentative, but a short-term upside line taken from the low of the 16th of October, if we see a drop below this, and ideally a drop below the 0.6873 zone, then yes, we will consider lower areas. We did get that drop, but as you can see on this 4-hour chart, you can see that the price quickly climbed back above it, so the bulls pushed it back above this upside line, and in a way it's kind of still balancing above this upside line, so it's really pushing the downside scenario away for now. So so that's why, guys, if you want to consider lower areas here, wait for a drop below the 0.6873, and only then we could, like I said, aim for the downside, for further declines, but only up until this other upside support line taken from the low of the 2nd of October, and then yep, we'll have a look at this pair then. But again, I'll repeat myself, this is only in the scenario if we get a drop below the 0.6873 zone. If it continues to trade above this upside line and pushes back above the 0.69 zone, then in a way we could see this one climbing back up here towards the 0.6929 30 zone here, and if this one fails to withhold the bulls, then a break would confirm a forthcoming higher high, and we could target higher levels. But for now, let's keep it short and simple. Let's see first what it wants to do with this upside line. USD-CAD. So USD-CAD, I talked about this one this morning as well, and basically what I was saying that in a way what you could do here is keep an eye on this downside resistance line. Previously I had a flag here, but to be honest, it became, after this little drop that we saw here yesterday, it didn't quite draw a nice flag, so that's why I'm just going to keep this downside resistance line here taken from the high of the 30th of October, and as you can see, the pair is again testing this downside line. Yesterday it did the same thing, and now it's doing that again. The only thing is that with the upside, I'll stick to the same idea here. In order for us to get comfortable with higher levels, a push above the 1.3185 zone is required before we could aim for slightly higher levels, and by slightly higher levels, we're only going to drag this one up until the 1.32 40 territory around here, marked near the highs of the 14th and the 15th of October. But if this decides to reverse to the downside, for us to start considering lower areas, a drop below the 1.31 level is required. So for now, guys, keep your eyes on these two potential breakout points. GBP Aussie, now something quite interesting here, and I'm really enjoying this chart very much because we are having ourselves a nice prolonged falling wedge formation. So according to all the textbooks and all the TA rules, of course, these patterns tend to break out to the upside. For now, we're just going to continue observing this one, as we need to see not only a break of the upper side of this pattern here, but also a push above the 1.8736 zone in order to kind of consider a possible move higher here. Again, like I said, according to textbooks, all this is looking quite bullish. This falling wedge pattern could be a bullish sign, but to be honest, it could continue moving like this here inside this pattern for quite a while. So that's why we always say that we need to wait for a break of the upper side of the wedge before before starting to examine higher levels. But to get a little bit more comfortable at this point in time, at this point where it is right now, we would need to see a push above the 1.8736 level before examining higher levels. In a way, if it respects the upper side of the wedge still, so it could reverse back to the downside here, drop lower, test the lower side of the wedge or the 200 EMA here on the 4-hour chart, and maybe it will find support around here and then reverse back to the upside. So we cannot exclude this scenario as well. We will exclude that when we see that break of the upper side of the wedge. So for now, we're keeping it simple here. In terms of the downside, well, to be honest, if this suddenly starts moving lower and drops below the 200 EMA, and even let's say drops below the lower side of the falling wedge and drops below the 1.8490, or should I say 1.85 zone right here, then this could lead towards a possible test of this medium-term upside support line taken from the low of the 30th of July. So we're still above that overall, but from the very short-term perspective, it is drifting lower inside this falling wedge formation. But let's wait for a breakthrough one of these levels here, guys, and only then we'll consider a further short-term directional move. EURJPY, something that's quite interesting here. So we've posted here on our TradingView account this idea of a possible long here, but only if we get a break of the this barrier right here near the 121.37 zone, 37, 38, roughly around there. In a way, if you want to round it up towards a nice beautiful number of 40, then you can do that as well. So 121.40, a nice good pop above this then could open the path towards slightly higher levels. For now, as you can see, the pair is kind of stuck inside this range, roughly between the 120.36 and the 121.40. We'll round it. So it's stuck in this little territory. So in a way, we're waiting until it will exit the range, and then we could target other levels here. So if we see a drop below the 120.36, then yes, we will aim for the 200 EMA on the 4-hour chart. We will aim for the 119.71 zone, or even better, the 119.05, which marks the low of the 15th of October. So, but again, before we could aim here, then we need that break here below this 120.36. In terms of the upside, a push above the 121.40 could do the trick here for more buyers, and we could then target the 122.32, which is marked by the high of the 10th of July this year. So quite an interesting pair, guys. Could be a nice setup for a trade, but again, we need to see a breakthrough one of these highlighted areas first before examining a further short-term directional move. EURUSD. So this morning I also talked about this one. So we've managed to rebound nicely from this 1.1063 zone. And this is what I was talking about this morning. So in a way, if we see a push above the 200 EMA, kind of the area where the rate could get stalled could be around the around the pivot, today's pivot, and basically now it's kind of sliding back down here. Even if it decides to push to the upside again, still, as long as it remains below this downside resistance line taken from the high of the 18th of October, we will kind of will continue aiming to the downside here. But again, as you can see by the arrow drawn, to be a little bit more comfortable, to get a little bit more comfortable with the further declines, a drop below the 1.1063 zone would be needed for us, and then we could aim for the 1.1021 or the 1.10 itself, or the even slightly lower levels here. But we'll get to those if we see that drop, or even better, ideally, maybe a daily close could do the trick here. And if we see a daily close below this 1.1063, then yep, further declines are possible. In terms of the upside, well, again, we would need to see a push above this downside resistance line first. Then we would need to see a push above some of these levels here. But as you can see by the arrow that I've drawn here, ideally we would like to see a push above the 1.1140. I do understand it's quite far from where it is right now, and we could be missing out on a possible trade here. But to be honest, all this territory is quite tricky, and to be honest, we'd rather be safe than sorry. We don't like to tease the market here, and or you know, respect the market. Let's put it that way. Again, guys, for now, like I said, keep your eyes for the upside. Keep your eyes on the 1.1140. Of course, keep your eyes on this downside resistance line. If it gets broken, then we'll start considering higher levels. But again, to get a little bit more comfortable, we need to see a push above the 1.1140. In terms of the downside, a drop below the 1.1063 zone could do the trick here for more sellers, and we could then start aiming for further declines here. So let's keep an eye on this one, guys, and wait for a break before acting on it. Okay, guys, I really hope you found it useful. Thank you very much for sticking around and watching until the end. If you want to join me tomorrow morning, as always, at my Traders Espresso, that's 7 o'clock GMT time. For now, I hope you have a beautiful evening, guys. Never overtrade, and yep, if you can leave it for tomorrow, leave it for tomorrow. Thank you very much, guys, and I'll see you tomorrow at my Traders Espresso at 7 o'clock GMT time. Thank you very much, and bye-bye.